could we talk about where we've been and where we're going. In Chapter 1, we learned about the accounting equation and how transactions would change it, how there would always be two effects on the accounting equation. But in Chapter 2, we realized that wasn't a very efficient way to record transactions. We introduced debits and credits as the beginning of a long process that we go through to learn normal balances, to learn how to increase and decrease accounts, to learn how to post, to learn how to prepare a trial balance. When you walked away from last week, you should have been familiar with how to prepare a trial balance and its value, what good it does us. At the end of lecture last week, as I was presenting to you the process, the predictable process that we've noticed, how business transactions create source documents and those documents are analyzed and journalized. We saw that the textbook was our source document and that we read the descriptions there in order to accumulate information. It is my opinion that we go through series of accumulating information in order to communicate it to others. Here's the third lecture in a row. We've talked about accounting being the language of business. That our job is to communicate to others about our financial condition. And we want to continue to refine that process. I want you to see every lecture as a link in this long chain that we're trying to create. Every lecture should connect to the past and prepare a way for us to connect something to it in the future. And that's exactly my intent today. I'd like to pick up right where we left off with this I referred to a moment ago. That's in last week's notes. How business transactions create source documents. And we analyze them. We journalize them. We post them to the ledger. And ultimately, we prepare a trial balance based on what we've accomplished. Let's formalize that. Because of its predictable nature, because it recurs over and over again, we've named that the accounting cycle. The accounting cycle is the routineness of business. How business repeats these events over and over and over again. You've heard it. This is just a formal way to write it down. You've heard part of it, at least. Business transactions create source documents. It's our job to do the thinking, to analyze the events, to express them in a way that computers can't, that humans can, to journalize them and post them to the ledger, and to see that debits and credits are equal and prepare a trial balance. You are familiar with those steps. You've experienced those steps in Chapter 2. That's what we ended last week with and we're beginning this week with. If we wanted to prepare financial statements, balance sheets and income statements, would it be okay instead just to hand the customer, the client, the banker, anybody else that's interested in our business a trial balance? Is that an acceptable format to give to others? I need a yes or a no. That's a pretty namby-pamby no, but you're right. No, that's an internal document, an important one, sure, but it's an internal document. Now, as we glance at the information on it, some information might be accurate and up to date. Some information might be in need of a little tweak here and there to have it appropriately reflect the truth. This is our opportunity to do that. We want to examine those accounts in the trial balance, looking for ones that are out of date. Maybe cash is just the way it should be. Maybe accounts receivables just the way it should be. But maybe supplies is a little out of date. Maybe prepaid insurance is out of date. And so forth. This is our chance to look at those accounts and update them. And generally, there's a deadline to be achieved and a boss breathing down your neck. One way to gather up this information in a good systematic way is to prepare a worksheet. to use the trial balance as a piece of scratch paper, that we could make these adjustments and get new updated numbers for the balance sheet and the income statement, and ultimately prepare the best, most accurate, reliable financial statements we could in a timely manner. Meet the deadline. Whew. I'm glad that pressure's off me. Big sigh of relief. We did it. Then what? Well, your boss picks up your financial statements and your trial balance and begins to compare the numbers and is immediately suspicious of you. The financial statements you prepared are not the same as the trial balance. The records in the accounting system, you might be in trouble. You based the financial statements on the worksheet. And now we need to go back. Now that the deadline's been met, the pressure's off, we need to go back and formally make these adjusting entries. The ones that we made in step 5 on the worksheet now need to be formally written as journal entries in the journal so that we can post them to the accounts. So the accounts will say what the financial statement said. And again, we've met a deadline. Now we've got this end of the year issue. I brought it up last week in class, in lecture. I mentioned to you the idea of real and nominal. What are we going to do with accounts at the end of the year? Do we just keep on going, real, or do we stop and begin again, nominal? I introduced it to you last week for such a time as this, so it wouldn't be brand new today. Some of the accounts were temporary in nature. Some of the accounts have served their purpose. Those temporary accounts need to be closed, and their impact temporarily on capital needs to be reflected permanently. We need to record the closing entries necessary. And finally, because in steps 8 and 9 we made journal entries, we need to record those journal entries directly and post them, and then make sure that we're in balance as our last action of this year before we move to next year. I feel like Billy Graham just announced the scripture verse in the crusade. I'm not ready to go to the next page yet. Hang on with me just a second, okay? Let's bask in these 10 steps. Do I intend you to memorize them? Absolutely not. Do I intend for you to experience them? Sure. Do I intend for you to have some reasonableness about them? What is it that we're accomplishing? So that in other situations later this semester, we could realize that little thing we're doing is part of this overall accounting cycle that we need to accomplish. Let's recap where we've been and where we're going. This is the third time today I've said we accomplished this before we walked in the room today. You were supposed to know that. And we intend to talk about these things today. I want to talk to you about adjusting entries and preparing a worksheet. And it's an important concept. Adjusting entries are really important because they are our last opportunity to have the financial statements say what they should, to get the accounts correct so that we could accomplish what we need to in communicating to others. These steps you'll be responsible for in your homework. I've got 50 minutes to do this today. We don't have time to do these things in class today. Be curious. Find good examples in the book and follow those in your homework. And through the week, as we get better at them, we'll talk about them. For instance, closing entries. It is my plan to, in first discussion this week, talk about closing entries in more detail. When you've looked at the example in the book, when you've tried it in your homework, when you didn't fully understand it, when you come to class curious and wanting to know, you're more likely to find good answers. for closing entries and other things here. So let's talk about what you did last week and make the transition to this week. I'd like for you to envision last week's homework assignment. Last week's homework assignment had a trial balance on an 8.5 by 11 sheet of paper, and we filled it up width-wise. We didn't fill up the length. We could have had a longer trial balance. But width-wise, we filled it up. I'd like to do some other things to that trial balance. So my suggestion is that we write it on the paper the other direction. You computer users know we just changed it from portrait to landscape. Did I get through to you just then? Yes? Now we've got lots of extra rooms to do the things that we need to. This could be a big sheet of paper, and it could be a bit overwhelming. And I don't want it to be. I want you to pay attention today and follow my instructions and suggestions and procedures and see it as one step at a time, each step of which makes sense. What is it that we're trying to accomplish in that step? Why are we doing that step? And step by step, little by little, we'll complete this great big thing and have something of value that we need to. So, let's start with the trial balance. The premise I've suggested today already is this is not an acceptable format to hand to an outsider. This is a good internal document, but outsiders expect it to look like a balance sheet or an income statement. Some of the numbers here are accurate and up to date. Some of the numbers here need to be updated. We need to go out and round up the information that should be incorporated here so that we have good information. And I provided that for you in the upper right corner on the handout. Do you see it? Say yes or no.
Yes.
So, we need to consider these one by one. Let's consider supplies on hand. Now I'm going to take sort of a two-pronged approach here. I'm going to try to get you to visually see this with the next page. I'm going to try to help you start and continue your analytical ability, accounting-wise, by using T accounts, what we'd like to accomplish. And then we're going to use the accountant's tool, the worksheet. These are going to go hand in hand. I'm going to talk about them at the same time. So you'll want to flip back and forth between them. Let's talk about what it is that we're trying to accomplish with supplies. Supplies probably had a beginning balance. If we're a brand new company, not so. But if we're a continuing company, we had some supplies at the beginning of the year. And when we were a tutor the very first week in accounting, we said we needed some additional supplies. We went down to Office Depot, we bought some supplies, we came back to the dorm room, and we put them on the shelf. And you've seen that transaction in lots and lots of homework problems you did. You bought supplies, and debited supplies and credited cash, or debited supplies and credited accounts payable. We bought lots of supplies. So when we get to the end of the year, this supplies balance, the sum of these two numbers, I would describe as being mixed. Kind of like you describe yourself when you're a little confused, you say, I'm mixed up. This is mixed. I contend that there is some asset portion in that account. But what about the portion that we've used up? We didn't make an entry for a drop of whiteout that we smeared on something, or eraser dust that we blew off the desktop, or an envelope we addressed, or a stamp we stuck on it. We don't make any entries for those. A sheet of legal paper that we wrote on and handed to somebody else and they read and crumpled in a ball and tossed in the trash. Am I making my point?
Yes.
We bought some supplies, we stockpiled it in that balance, but we've made no entry for the reduction that has occurred as we use up those supplies. That account balance is mixed, all confused. It has asset portions and expense portions in that account. If we leave them that way and tell others about it, that's a great big fib, which is a euphemism for a lie. Y'all with me or not? Do you want to tell others about this mixed condition of yours? No. Now's the time for you to make an entry to sort out these two accounts. Consider doing nothing. You would overstate assets and understate expenses and overstate net income and mess up both financial statements. We ought to do something. We need to determine the portion of this which we have used and move the used portion from the supplies account to the supplies expense account, leaving in the asset account the unused portion. Both accounts will be better because of that. The ending balance of supplies will be the asset you have on hand, the ending inventory of supplies. Both financial statements will be better. So, how can we accomplish that in this worksheet? It says in the upper right corner, supplies on hand 170. So that's the ending balance we're trying to achieve. 170 is the truth. But if you look at the trial balance on the worksheet in your handout, it says on that trial balance, the beginning balance of supplies is, say the number, 970, and I put it in the T account for you. Are you with me? Something happened for $970 worth of supplies that we could have possibly used to become the $170 worth we really have on hand today. What must that have been? Let logic prevail. What happened to cause this difference?
800.
It's a difference of 800. How are we going to label that 800? Wouldn't that be the portion that we used?
Mm-hmm.
Yes?
Yes.
Let's credit supplies expense and debit supplies for $800. We could do it in the T accounts, but here's the faster way to do it once we accomplish it. Let's find supplies in the trial balance, and on that line, credit that with $800. And let's look among the expenses and see that supplies expense wasn't listed there. There was no need to list it. It didn't have an account balance. It wasn't helping us maintain the equilibrium of debits and credits. So, let's add that at the bottom, and any others we need to. Let's debit supplies expense. In the adjustments column, we're going to debit supplies expense and credits to supplies. And the tradition is that we join those two together by putting the same initial letter beside them. A little a and a little a. We'll put those together and tie them together. You'll find that to be useful later. When you do your worksheet by hand, I'd encourage you to do that. I haven't figured out a way to do that on Excel. If you put that A in that cell, then that's going to be a text. And to extend this and use the mathematical wonder of Excel, that's not going to be a formula that you can do. Did you understand what I just said? So figure out a way. If you want to put a little A beside it, you can. I'd like for you to, especially if you did it by hand. If you're doing the worksheet on the computer, I'll forgive you for that. Unless you can figure out a better way to do it. So, we debited supplies expense and credited supplies and made both accounts better. I contend that some things we have to get before we can use them up. Supplies is a good example. And so is insurance. Would you look in the trial balance, please, and find the account prepaid insurance? And on cue, in just a second, shout out to me real loud, the balance of prepaid insurance. Go ahead and do it now. The balance of prepaid insurance before adjustment is $800. But it says in that box that $700 has expired. So again, if we looked at it from a T account perspective, there probably was a beginning balance in prepaid insurance. And perhaps we paid some additional premiums during the year. You've done that in your homework. Debit prepaid insurance, credit cash. Now that was an asset. You paid those premiums for a year, perhaps. And every day that passes, some of that becomes an expense. Every moment that no calamity takes place, this insurance becomes an expense. Don't you suppose the people up the eastern seaboard, New York City, New Jersey, are glad they had insurance? Those that did? Here's the same concept. Now, I didn't get to collect on my insurance for the weekend because no calamity happened. Thank goodness. But they probably will. That's why you have insurance. Yes? Every moment that passes, some of that asset becomes an expense. Shall we make an entry every moment? That'd be a little laborious. Shall we do it at noon before we go to lunch and at 5 o'clock right before we go home for the day? Yes or no? No. Shall we do it every Friday? Y'all with me here? How about us just ignoring it until we get ready to prepare financial statements? And realize that if we prepared the financial statement without updating this account, this confused account, this mixed account, this partial asset, partial expense account, this used and unused portion, right before we prepare financial statements would be a really good time to update this account. If we do nothing, we overstate assets, understate expenses, mess up both financial statements. If we do something, then both financial statements are better. Let's do something. Let's figure out the used portion, the expired portion, and transfer that to the expense account. Refresh my memory about the facts. In the trial balance, prepaid insurance had a balance of, say it again? $1,800. $1,800. I said $800 a second ago. I misunderstood you. $1,800. We want to move the expired portion from the asset to the expense and leave the unexpired portion, the asset, the part that belongs to the future, in the prepaid insurance account. So let's attempt to do that. Let's plug in numbers we know. In the trial balance, it said the balance was $1,800. In the worksheet box up in the upper right corner, the adjustment information says $700 was expired. So do we need to make this entry for the $700 we're given or the $1,100 difference? 1,800 minus 700 is 1,100. Y'all see how I got it? So can we use the previous one as a good example? Think about supplies. We subtracted, found the difference, and made that entry for that much. Didn't we? Didn't we? Yes. So, let's memorize. Everything in accounting is just black and white. It's all the same. You just get in a rut and do the same thing all the time. Shall we? A minute ago, we subtracted, found the difference, and made the entry for that much. If we subtract and find the difference, we'd make this entry for $1,100. Maybe that's the right answer. Maybe it's not. Maybe you need to be a human and think and analyze like you can better than anybody on the face of the earth. For how much should I make this entry? I should make this entry for $700 because what is the difference between the way the information was presented this time and the first time? What's the difference, Talon?
This time the insurance was expired, whereas the supplies was what we have on hand.
Thank you. Precisely what I wanted to hear. Did you hear him? Yes. A minute ago we were told what we had on hand, what we wanted the asset account to have in it. This time we were told what was expired, what we wanted the expense account to have in it. Can you memorize? Yes or no? Yes. No. No. You've got to consider the fact circumstance and deal with it the way it was given you. You've got to be on top of your game and think. And that's why you're in college, is to practice your thinking skills. Analyze. So let's make an entry on the worksheet. This time, we're going to make the entry for the amount given because it was described as expired, the amount we wanted in the expense. Prepaid insurance already had a balance, $1,800. We were told $700 of that expired, became an expense. We want to remove that from the asset account by crediting it. I'm going to look among the expenses, and insurance expense was not listed. I'm going to look down at the bottom of the list at all these blank rows and add insurance expense as one of the things that I'm going to need right now. I'm going to debit insurance expense and credit prepaid insurance Put letters B beside them to tie them together if possible, and move on to the next one. If you're with me right this minute, say yes.
Yes.
If you're not, why don't you make yourself a note out in the margin of a question you'd like to ask. I'll try to help you at some point. Let's consider the adjustment information in the box in the upper right corner. Some things you have to get before you can use the money. Supplies is a great example. Prepaid insurance is a great example. Even equipment is a great example. Buying equipment that lasts us a long, long time is an asset when we acquire it. Just like supplies, just like prepaid insurance. Through the process of time, we use up supplies, we use up insurance, and we use up the equipment. Do you see the parallel I'm drawing? There are some similarities here. We treat this one a bit differently. Let's look at the accounts, equipment, which has in it the cost, the amount we paid for that item when we purchased it. We really like cost. Somebody ought to start a tally right now about the numbers of times we say cost in class and out of class related to this topic. We're going to say it a lot. We really like cost on the balance sheet. So we always want to know the cost of that equipment. But in the same way that supplies was used up and we credited it, and prepaid insurance was used up and we credited it, we should reduce this account for the benefit that we received. As we receive benefit from that asset, we record that benefit in an account called depreciation expense. Depreciation expense is the attempt we make to say we benefited from that asset this year. Now we're going to debit depreciation expense. And we could credit equipment, but then we'd never know its cost again. We'd like to know its cost. Always. So instead of crediting equipment directly, we're going to credit an account called accumulated depreciation. Accumulated depreciation, I abbreviated. I'm hoping you are embellishing your notes and saying the word writing down the word I said, not what I wrote on the screen. Accumulated depreciation and depreciation expense share a word, accomplish two entirely different things, could be confusing if we don't understand what's going on. You need to sort them out this semester. You need to understand the difference between depreciation expense and accumulated depreciation. So, let's talk about debiting depreciation expense and crediting accumulated depreciation. Let's talk a little bit about the unusual nature of accumulated depreciation. We had one account like this last week. The special relationship that accumulated depreciation has to equipment is called contra. Contra means opposite. Another contra account that we should have known before now is drawing. The owner's drawing account is contra to the owner's capital account. John Doe drawing is contra John Doe capital. Capital's balance is credit. Drawing's balance is debit. It's contra. If you're with me, say yes.
Yes.
Equipment's balance is debit. Accumulated depreciation balance is credit. It's contra. It's opposite. It's connected to. It doesn't exist without the other. You take away the other, it goes away too. You with me? Contra asset. There are 5 kinds of accounts: asset, liability, capital, revenue, expense. We now know contra account to 2 of the categories. We know contra capital, drawing. We know contra asset, accumulated depreciation. Before it's all over, we'll know contra to every category. And when we combine these 2 accounts, the result is worth naming. Accumulated depreciation subtracted from equipment is a concept called book value. Now, it's a misnomer. A misnomer means it's not a very good term. I don't think Pacioli made it up, and I don't think I made it up, and I don't know who made it up, but I can criticize him if I want to. Book value is not a very good term. Book value suggests that's what you could sell it for. And it was never our intent to sell this asset. we always intended to use this asset. Book value is the portion of that asset we've not yet received benefit from. It's the remaining asset, the portion that we plan to use in the future. Now, I know where we're going, and I've been there before, and I'm trying to prepare a way for you. I would like, from this moment on, you to know what book value is. When it comes up the next time, I want you to know what it is. Every time. Not just on the test. I mean second semester, and in another course, and sometime in your life. So, I'm going to do this bold thing and beg you. Would you please know what book value is? Please? The next time I ask you what it is? Yes or no?
Yes.
The next time I ask you what it is and you have that duh look on your face, I'm going to say, remember the time in lecture I got down on my knees and begged you to know this? And you're going to think, oh yeah. But you're not going to remember book value until I tell you the part about me getting down on my knees. It's a simple little concept. The cost of the equipment minus the depreciation we've taken on that so far, the benefit we received in the past leaves us to have benefit in the future. That benefit we expect in the future is called, say it.
Book value.
Book value. Thank you very much. Know it, please. So let's make an entry. In the box in the upper right corner, it said depreciation was $19.19. So let's find what we need to do. Among the assets, there is an account called accumulated depreciation, that contra equipment account. We're going to credit it. And among the expenses already provided there is no account depreciation expense, but there's plenty of space for us to add anything we'd like. So let's add depreciation expense as an account we need right this minute. Let's debit depreciation expense and credit accumulated depreciation, just like we did in the T accounts a second ago, to improve both financial statements. To record the benefit we receive from this asset, this time period. Let's put letters C beside each of them to tie them together. Now, before the days of spreadsheets, before the days of computers, when we did this by hand, it was really important that we put those letters beside them. I've seen worksheets with 64, 65, 70 adjusting entries on them. We're making 4. I think you could sort these 4 out, maybe 6 or 8 in your homework. But in real life, that's a good tradition to try to maintain so that we wouldn't be confused about it. So, one more. I contend that some things you have to get before you can use them up. Supplies, insurance, equipment are all good examples of that. Some things you get the benefit from before you pay for them. This is opposite of what we've been talking about. And employees are one of those things. Let's talk about the problem that we have at the end of the year. When we pay our employees on Friday every week, and on Friday we're paid up and recorded up. The payment to the employees caused us to make a journal entry on Friday. We were up to date. Our records were good. They took Saturday off. They took Sunday off. They came back and worked for us on Monday, Tuesday, and Wednesday. And we recorded revenue that they helped us earn those days. The revenue they helped us earn is going to be reported on the income statement that we're about to prepare ending December 31st. But if we don't do something, the expense that we incurred to them will be recorded on Friday. Now, is it fair? Is it reasonable? Is it good? Is it logical to report the revenue in one year and the expense in another year? That's not what we're trying to accomplish on the income statement. Our income statements are going to be better when we can report all the revenue and all the expense on the same income statement. We're going to like the result net income better. So we need to do something to get this expense that we've incurred that we would have recorded on Friday, recorded earlier, recorded in the year that's about to end. That expense needs to be recorded in the year that's just ending. We're not going to pay employees Wednesday and then pay them again on Friday. That's a whole lot of work. Way too much work. But we can make an adjusting entry. That's the step we're in. We need to make an adjusting entry to accomplish that better. This kind of an adjusting entry has a name. This is called an accrual. Say it.
Accrual.
Accrual. One of the things you've been doing since chapter 1 is dealing with this word incurred. Incurred and accrual have a lot in common. This is something that's happening for which no cash has been exchanged. This is an accrual. So we're going to make this accrual adjusting entry. Notice the terminology now. It sounds different. Wages accrued, hear it, same root word, $1,025. So let's see if we can accomplish that on the worksheet. Wages expense is already here. Wages expense had a balance. We've been paying employees every Friday. But here's an additional expense that we need to record for these few days that they've worked for us this pay period. We're going to debit wages expense. Now, I'm not going to pay it. I'd like to credit wages payable. But if I look among the liabilities, wages payable is not there. I haven't used wages payable all year long. But here's some blank lines down at the bottom. I can fill in anything I want to. So I'm going to call it wages payable, add that account, and credit it. I am debiting wages expense to record this portion that belongs in this year. I didn't pay it, but I'm admitting that I owe it. Salaries, we could call it salaries and wages payable. That's the term the book's using. I'm calling it wages payable. Save a little space. Debit wages expense, credit wages payable is making both those accounts better, both those financial statements better. You have made the adjusting entries. We need to know the accuracy of our work. In real life, you would sum those two columns and get you two totals that agree. If they don't agree, you'd go look for your mistake. Today you may have my permission to write my totals down, but you really shouldn't. You could have made all sorts of mistakes that wouldn't be reflected there. You need to add your own. Don't take somebody else's word for it. Now, you've got a great big old worksheet. The first step is to make the adjusting entries. I'm going to run out of room, or the image is going to become so small that I'll say that in a minute. Here we've got a trial balance column and an adjustments column that we need to combine and get new updated balances called the adjusted trial balance. And this is just the mechanics of the debit credit procedure. You can handle this. We're going to take all the numbers in the trial balance column, update them with the new numbers, and extend them as a debit or a credit to this new column. We're going to do it one line at a time. Help me out. Get a little bit ahead. Check your work if you want to. Stay right with me. If you fall behind, try to catch up. Cash was unchanged. It had a debit balance. It still has a debit balance. Let's enter cash in the trial balance debit column. Accounts receivable had a balance. Was unchanged in the adjustments column. We should extend it just as it is to the adjusted trial balance column. Supplies of $970 debit was changed with an $800 credit. I've got a debit and a credit to combine. Should I add them or subtract them? If you know, say it out loud. Subtract. If I subtract 800 from 970, the balance of that account will be 170 debit, which matches the amount in the box in the upper right corner. Supplies on hand was 170. Y'all with me or not? Yes. So prepaid insurance had a balance of 1,800 debit. A credit of 700 was entered in the adjustments column. I have a debit and a credit. Should I add or subtract? Say something. I subtract and I get $1,100, which was the amount prepaid. The expired portion was $700. The unexpired portion was $1,100. That's the asset that remains. Equipment's balance, $24,090, was not changed in the adjustments column. We extend it just like it is, $24,090. Accumulated depreciation had a credit balance, and we credited it. How should I combine a credit and a credit? Say something. You'd add that. A credit and a credit would sum to $7,772 that we need to extend to the adjusted trial balance credit column. The balance of accounts payable was unchanged. It was a credit. It should be a credit in the adjusted trial balance column. The owner's capital account was unchanged. Let's extend it as a credit. Drawing is contra capital. Its balance is debit. We're extending it to the adjusted trial balance debit column. Service revenue was unchanged. 26,324 needs to be extended. Wages expense had a debit balance, and we debited it. How should I treat two debits? Thank you. Two debits would need to be added. 12,395 plus 1,025 is 13,420. It's a debit extended to the adjusted trial balance column. Rent expense is extended as a debit. Miscellaneous expense was unchanged and is extended as a debit. What about these stragglers? Do they deserve to be extended, or shall we ignore them? We need to extend them. If we don't extend them, we would be out of balance. They're part of the picture now. They're worthy of being included. Supplies expense, debit balance. Insurance expense, debit balance. Depreciation expense, debit amount. Wages payables, credit amount. All need to be extended to the adjusted trial balance column. If you're with me right this minute, say yes.
Yes.
We need to sum these two columns and see how we did. You can't take my word for it. Yes, this is a demonstration, so you may write those numbers down. But in real life, if you're working with a group, you need to do your own math. You may have extended them to the wrong column. You may have made a transposition or a slide, a mistake. You may have left one out. You have to add your own work. We need the assurance of the accuracy of our work to be able to continue on. Now, if I go zoom one more time, these numbers are going to be so small you may not be able to see it. I'm finished with the trial balance and adjusted trial balance columns. I'm going to just pretend that I'm not going to show them. They're still there. You've got a piece of paper that says so. I'm going to scoot the adjusted trial balance column over a bit to reveal the income statement and the balance sheet columns. We need to sort, classify, extend, give updated numbers. These are the numbers on which the financial statements will be based. Do you remember last week at the end of class I asked you to classify accounts 5 ways? Asset, liability, capital, revenue, expense. 2 ways, balance sheet or income statement. 2 ways, real and nominal. Yes or no?
Yes.
Lots of people were nodding their heads. Thank you very much for that affirmation. I asked you that question then for this moment. We practiced, and in my discussions all last week about on which financial statement does an account go for this moment. I think you know this. If you don't, you can this week. What we're doing is taking that adjusted trial balance column and placing that one number as a debit or a credit one place in these 4 columns. It either goes on the balance sheet or the income statement. It either goes there as a debit or as a credit. Whatever it is, debit or credit, it remains. You're not going to change it now. All you're deciding is, does it go on the balance sheet or the income statement? Accounts that go on the balance sheet, the accounting equation, go there as a debit or credit. Income statement or accounts are revenue and expense. Here we go. Keep up. Cash goes on the balance sheet. It was a debit. It is a debit. Now you do one. Accounts receivable goes on the balance sheet. It was a debit. It is a debit. Supplies goes on the balance sheet. It's an asset. It goes on the balance sheet. Prepaid insurance is an asset and goes on the balance sheet. You see how it works? Yes or no?
Yes.
Equipment is an asset. Goes on the balance sheet. Here's our first contra account. The rule about contra accounts is that contra accounts go on the same financial statement that the main account, the account to which it's connected, goes. Since equipment goes on the balance sheet, accumulated depreciation goes on the balance sheet, its balance was credit, it remains a credit, 7772. Accounts payable is a liability and goes on the balance sheet. Capital goes on the balance sheet. Now, drawing is contra capital. Drawing's a bit different. Drawing goes on the statement of owner's equity. There's not columns for the statement of owner's equity. If there were, this would be the only entry there. It's not worth having a column for it. So we're going to go back to the previous rule. Since capital goes on the balance sheet, drawing, its contra account, goes on the same financial statement on the worksheet as the main account does. Capital goes on the balance sheet, drawing goes on the balance sheet. When you actually prepare the financial statements, drawing goes on the statement of owner's equity. Service revenue is revenue and goes on the income statement. Wages expense is an expense with the debit balance, goes on the income statement. Rent expense goes on the income statement, as does miscellaneous expense. Shall we extend the ones we added at the bottom or ignore them?
Extend.
We have to extend them. It wouldn't work if we didn't. Supplies expense is an expense. Insurance expense is an expense. Depreciation expense goes on the income statement. They all have debit balances. What's wages payable? Anybody that knows that?
Liability.
It's a liability and goes on
Balance.
the balance sheet. In Monday's lecture, right at the end, when we ran out of time and we're doing the worksheet, I asked you to bring this handout with you today and to have sum these 4 columns. May I ask 4 people to volunteer and tell me those totals? Anybody have this up already? Here we go. Deanna.
Oh, 18,500.
Income statement debit total. Say it one more time, Deanna.
18,547.
18,547 is what Deanna and I got. You may take our word for it. I hope you did it on your own. It's always better when you do it. I'll show you what a team player I am. I'm going to add this income statement credit column. Let me see. That's $26,324. I need an auditor.
That's right.
That's pathetic. I need an auditor.
That's right.
That's a little bit better, but not enough. Oh, wait a second. I thought everything had to balance. First chapter, every transaction in the accounting equation balanced. Second chapter, every entry had a debit and a credit and they balanced. This chapter, we started out a big old worksheet here and the trial balance columns balanced and the adjustments columns balanced and the adjusted trial balance columns balanced. Oh, my. This is driving me crazy. I'm on the verge of a nervous breakdown here. I can't stand it that these aren't in balance. Let's come back and resolve that in a second. How about balance sheet debit total? Who's got me this total? I need some help. This sum, somebody quickly. Yes, ma'am?
34,397.
34,397 is what I got. Don't take our word for it. You ought to add it up yourself. How about balance sheet credit total? One new volunteer. Anybody else add it up before you came to class today? Wesley.
26,620.
26,620, Wesley says. Here's what I got. And I'm pretty stressed out over those 4 totals. Everything's balanced up to this moment. And now I've got income statement columns that don't balance and balance sheet columns that don't balance. Let's soothe me a little bit. Let's calm me. Here's how you do it. I suggest that we find the difference in these 2 totals. And that we write the difference under the smaller total. If you weren't participating to this point, you can participate the rest of the way. If you got a calculator with you, get it out. You learn more when you participate. Tell me about this difference. I need a volunteer. I need them fast. Talk to me, Hans.
The difference is 7,777.
77, like in South Louis kind
Like
of
in South.
makes you feel right at home, huh?
Yeah.
7777 is the difference. So hear me one more time. Find the difference in the two totals and write the difference under the smaller total. You get a little slothful about this, and accounting is a little procedural at times, a little detailed oriented at times. There are some expectations at times. So here's what I'd like you to do. I'd like you to bring down two totals that agree side by side. Give me that soothe, okay? Make them look like they balance. 26,324 plus 0 is 26,324. And 18,547 plus 77,77 is 26,320. Those look so much better, don't they? In balance. I forced them that way. Here we go again. I'm a little stressed out over these not balancing. Anybody found the difference in these two totals for me quickly? Yes, ma'am.
77,
Cassidy.
77.
What? What'd you say?
77, 77.
Now, that's just two coincidences like that in the same time period? Can this be possible? For the third time. You find the difference in the two totals and you write the difference under the smaller total. And you bring down two totals that agree. So 34,397, this is the part where you're slothful. You think it's okay to leave that number there and have this number here and make them appear to balance. And I'm trying to tell you, not only do we want them to balance literally, we want them to look like they balance. Soothe me. 34,397 plus 0 is 34,397, and 26,620 plus 77,77 is 34,390. That looks so much better, doesn't it? Now, is there method to our madness? Let's talk about what these numbers represent. Let's talk about this number, for instance. You've got a whole worksheet to look upon. Give me a good descriptive title. What might we call this besides total? Total
Income? Income total?
No. A good wrong answer. Tell me about this total. Look up in that column and see what the numbers are that we summed to this point. What's this? Somebody?
Revenue?
That's total revenue. Isn't it? Yes or no?
Yes.
Yes.
What's this?
Total expense.
Ah, now we're on a roll. That didn't take so long, did it? This is total expense. Now, we've had this conversation before, and you know this. What happens when we subtract total expenses from total revenue and revenues more? What's the name of what you get? Say it.
Net income.
Thank you. Ah. Now, if that's net income, and this is a great big worksheet, don't you think we ought to write net income over here and label that? Yeah. So that's why net income appears in that column. But why did net income also appear in the balance sheet credit column? Any takers on that one? I'll lead somebody if they're willing. Wesley, you willing? You want to do it on your own, or you want me to lead you?
Well, let me give it a shot.
All right. Why does this same number that we've determined to be net income also appear in the balance sheet credit column?
Well, the credit column on the balance sheet is going to be everything that you owe or liabilities and your owner's equity.
And?
So your net income is part of your owner's equity.
It is. Doesn't have anything to do with the liabilities part of that, but it has to do with owner's equity. Hey, class. What does net income do to owner's equity? Speak up. It increases it. Yes, Wesley? And what is capital's normal balance that's up there someplace you referred to, Wesley?
I don't understand the question.
What's capital's normal balance?
Credit.
In this column, Wesley says, there is an account, owner's equity, capital, that's got a credit balance. Yes? What do you know about a credit, capital, and this credit, net income? Two credits. How would you treat them? Would you add them or subtract them? Speak.
Add.
Not enough people said?
Add.
For the record. This is ready to add to capital. We're going to increase capital by the amount of net income. That's why it's where it is. That's why it came out in these two outside columns. Now let me give you my last tip. When you do the procedures I just described for the fourth time, find the difference and write the difference under the smaller total. When you do those procedures and get differences in these two outside columns, it is net income. If you find the differences, follow the procedures and write the differences under the smaller total, and your differences turn out in these two columns, it's net loss. If you find the differences and write them under the smaller total, and it's in an outside column and an inside column, are you looking up? Or an inside column and an outside column, it's wrong. It'll never be that way. I mean, it'll never be that way and be right. It's wrong. It's either the two outside columns or the two inside columns. If it's the two inside columns, it's net loss. Do you have a question about this before we leave it? Worksheet's a great tool to gather information and meet the deadline of preparing the best, most accurate, reliable financial statements we can. In Chapter 4, if you haven't discovered it, there is a really good example like this on clear sheets of plastic that is just this building block approach. You could look at those examples and see essentially the same thing I demonstrated today, including how to put the totals on this worksheet. Unfortunately, I'm out of time. Have a great day and a great week.